Okay, I'm going to try this one more time. This is the second installment of the Romeo CRT 2023 review. So in early 2024, Romeo, who is a trader on YouTube, a trader mentor, author of a trading approach called CRT and many other trading approaches, a trading logic, a way of looking at the markets. He was kind enough to share all of his public trades in 2023, a compilation, like kind of a PDF that contained everything that he shared publicly before and after. You put the trade on, you see how it goes. You know, are you going to be right? Are you going to be wrong? Are you going to make money, lose money? He's actually posting this just for purely educational purposes. So did he call the candles correctly, right, to follow? Yes, he did. 80% of the time, right? 80% of the time he's calling it correctly. So I love CRT. I think it's what a great gift to the kind of the day trader community. Pearls before swine, in my opinion. I'm going to look at the second trade in 2023 in his PDF. Oops, that's not the second trade. There it is. So Bitcoin had a cycle bottom in the Q4, the fourth quarter of 2022. Cycle low. It hit, I think it was coming in from a high of like, I don't know if it had 64K high, right below 64, in the high 50s at least. I actually can't even remember. But then in late 2022, liquidity drained from the global financial system. Bitcoin is a liquidity product, by the way. And the liquidity was bottoming out in October of 2022. You had a British sovereign debt crisis. The British sovereign bonds are called gilts, and they were either going to have to make the British pensions go into kind of like a state of panic, and because of these bonds losing its value and the total return on bond funds losing lots of value, and so they kind of had to devalue their currency versus the dollar at this point. So that fall of the year 2022 is when you saw the pound, and the pound, Brexit, it was at $1.25, GBP USD, and so, but in 2022 it was even worse. It was at parity with the dollar, near parity, right? The euro was below parity. So you had all sorts of earthquakes happening through the global financial system. Bitcoin took that on the chin. It was a bear market for Bitcoin for sure. In 2022, late in 2022, you had the bottom put in, and I believe Romeo was one of the people to call this publicly, call the bottom, because of his approach to understanding candles, candle range trading, CRT. I don't think he called it CRT at that point. I think he was into just calling it a turtle soup, but it was same kind of theory. The same kind of theory applies, and you're going to see a lot of the stuff that he's kind of revealed in the subsequent years since that 2023, when he first went on, it was then called Twitter, into 2024, 2025, and now 2026. All of his stuff that he's been teaching, it really layers into all this. There isn't just like this, oh, it's this system and you put it aside and you ignore it, nothing, it's not relevant any longer. No, it's all relevant. It all layers into itself, and that's another thing. But just kind of pulling back from the I'm sounding like a fanboy here. I want to analyze these trades because I want to look for patterns that maybe he's not revealing to his audience. I want to look for setups before the setup, right? I want to look for ways of counting on recurring nuances to this whole thing that he doesn't have time to explain, or maybe he's waiting for a future date to reveal this. But I want to figure this stuff out for myself. I want to become a better CRT trader, so I'm looking at like what is essentially the gold standard of CRTs to better understand it. So here we are in the weekly time frame. we've got the large down close candle in the in Q4 of 2022 is really important. That's a really important week. So it basically it opened just below 22,000 and it went all the way down to 16,000. Probably got a lot of people to sell below this low. A lot of kind of holding on for dear life. I'm selling. Like if you bought at 32, you've lost half your positional value, right? At 16. So it's just a sad time for Bitcoin bulls. The absolute most fear is in the market, right? If you think about the fear greed gauge. But anyways, really large down close candles takes out a old low, stabs into liquidity. This is a large order block, right? And the large order block gets confirmed as a bullish order block. In other words, a zone where price can retest and then become bullish by the presence of this first FVG. So this candle right here, after this very tight range, I'm thinking vol selling, right? From an options perspective, there's so much volatility built up or realized volatility, and I don't know if you're familiar with options, but your IV ranking of Bitcoin must have been so high. You sell all that vol, 1, 2, 3, 4, 5, 6, 7 weeks of selling vol, right? You could say that maybe this weekly down close or this weekly low right here might have been a manipulation, a little false move lower, a little false market structure break lower, and then it continued higher, right? But the meat of it continuing higher is this one weekly candle here that opens at around 17,000 and closes at above 20,000, right? So essentially above this low, right? So we had this week where it tested this low, and it was almost like a breaker, right? Where a very kind of like a weird lopsided type of breaker entry where this is the breaker, and then it traded up into it and failed. It failed, this former area that was, should have been resistance, right? Or sorry, should have been support. And it was support because it carried price up here, this kind of false restart to the bull rally here that occurred in Q2 of 2022. Well, that support turns into resistance very, 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 very temporarily, right? For the week that it tested, the following week, the week after, and then it blasts through it and closes above. Okay, so here we have an FVG, a very large FVG forming, and then another FVG forms, right? Another up close candle, and there's even more momentum. So because after that you have a retest of that second of the two consecutive FVGs, and you finally hit, I think, what you could consider probably the full target. So if you have a turtle soup and you're thinking, this is the low, this is the high of the range, this is the turtle soup, I'm entering here and I'm holding till here, okay? As far as like a trade that might have started in 2022 and ended in Q1 of 2023. A very, you wouldn't even call it a swing trade. It's like a long-term, pretty long-term trade in my opinion. I'm a scalper. I trade prop firms, so I have to close my trades at the end of every day, and that type of trade seems like a long time to me. So anyways, we're going to look at this high when we get into FX replay, but this was actually a bearish turtle soup, right? Because you've got a lot of inefficiency right here, a buy side imbalance, sell side inefficiency, aka a bullish fair value gap, and then another buy side imbalance, sell side inefficiency, another bullish fair value gap. Two bullish fair value gaps makes what I would call a consecutive fair value gaps, a pair of them, okay? And we want to trade back into that internal liquidity for efficient market making purposes. There might be sellers, Bitcoin sellers, that need to mitigate their position at or around. So if you had sold there and you're a large seller, you're looking for price to come back down right around to where your entry price was to sell to mitigate your losses, right? And you might have been ready to go long Bitcoin at some point in Q1 of 2023, but perhaps not in January. This was January. This was like the first half of January, right? But now that it's March, early March, so it was like March 10th, a little after that, is when you start to see these good entries here with this week. You might be ready to enter, right? So it's giving large buyers time to get in. It's giving the large sellers, aka the whales, right, time to get out. And so it's just efficient price making, it's efficient market making. Okay. Now, this after picture, let's look at this. The payoff was how quickly. So in other words, if it took, let's call this range candle number 1, range candle number 2, 3, 4, 5, 6, 7, 8 being the entry candle. If it took 8 candles, 8 weeks of trading for this setup to fully mature, to fully ripen, it only takes 1.5 weeks, right? And actually what's really funny is, and we'll look at this upward move, like the difference between here and here, it was on a Saturday. So in other words, this week opens on a Sunday night and you go through 6 full trading days, because Bitcoin trades 24 hours a day and actually 7 days a week, right? And so basically in the twilight of the weekly candle, that's when you get this crazy move from 20,000 all the way up to where the candle actually closes. And it's very important where this candle closes, because this is a weekly CRT, candle number 1, candle number 2, candle number 3. And so really, you can't even call this a 2-week payoff. This is truly a 1-week payoff in my mind, because you round down. It's literally the open of this week. So Sunday night, that's when the Bitcoin Tether contract opens on the weekly candle, all the way up to where the weekly candle closes, which it closed above the high of, actually I'm not sure if it closed above, but when this screenshot was taken, right, from here to here. And actually you can tell, you actually can tell when the screenshot was taken, because this was taken over the weekend and this was taken over the weekend, right? Because if the candle, so this is probably that Saturday, and we'll see when we get onto the 4-hour chart some of the more specific timing of these screenshots. It's kind of interesting to look at too, because you can kind of like reverse engineer some of the methodology behind like, okay, I'm gonna be looking at the chart for an entry, and I'm gonna be looking at the chart as a point to take a screenshot, take some profits off the table maybe. Anyways, so my goal here, I want to break down the macro backdrop, and just as an object lesson in why you really don't want to be reading the news when you're trying to make trades like this. Don't be refreshing the Bloomberg.com. Don't be looking at the Wall Street Journal front page. Don't be looking at investinglive.com or any of the other like AI slop finance blogs. Like even Zero Hedge, has got some little nuggets sometimes, but actually I don't even know if Zero Hedge is probably behind a paywall anyways. Don't be paying for that. Don't be looking at it. It's all hindsight, because the stuff of finance that generates the news, the true plumbing of how large sums of money are moving back and forth between asset classes, it happens weeks ahead of when the news happens. Okay. So yeah, macro backdrop. Then we're going to get into FX replay, and I want to look at the daily, the weekly, and I also want to look at the monthly chart, because this is actually a monthly 3-candle CRT, which is so cool. And then going back down to the 4-hour chart, so treating this like a weekly CRT and then going back down onto the 4-hour chart. Then we'll look at model number 1. We'll look at a potential kind of like a breaker style entry, though I don't think you really get a breaker entry on this one. You kind of get this, what do you get? Oh, I'll get to it when I get to it. And then you actually get, so what I was calling model number 2, I actually did this a while ago, is this is actually an FEG entry. I'm actually fully reading this now. So yeah, so you get model number 1, you get an FEG entry, and then we could look for potential kisses of death if we have time. So going back to the macro backdrop, these are the headlines that you're reading when you're trying to go long on a super risky of risk assets. Oftentimes Bitcoin correlates with NASDAQ. NASDAQ is, tech associated equities. They're higher beta than the S&P 500. Beta is risk, high reward. But yet look at what risk is shouting at you, at least in the news, when you're trying to go long on this liquidity product, Bitcoin. Silicon Valley Bank it's like an old-fashioned bank run, except for rather than line up at the bank teller and whatever branch it was, people are whipping out their smartphones and they're instantaneously withdrawing like hundreds of thousands of dollars per checking account, per savings account, per whatever. And meanwhile, whoever's managing the portfolio at Silicon Valley Bank, I mean, they've got all these bonds that they can't mark to market. They've got to keep it, marked to book value. The interest rates are climbing. We just had a sovereign debt crisis. We've got these rumblings of banks about to fail in Switzerland. We've got rumblings of central banks needing to intervene. And in fact, March 16th, which is really interesting. It was Fed Chair Powell working on the monetary policy side, and then on the fiscal side, it was Treasury Secretary Janet Yellen. And so she was the one that kind of behind the wheel of the U.S. Treasury, which I believe, I could be wrong about this, but I think the FDIC is kind of like, they either work closely with the Treasury or they're part of the Treasury. But the FDIC is kind of this anti-bank run institution, like it's Federal Deposit Insurance Corporation, right? And so they guarantee the funds in any U.S. bank that has a charter up to a certain dollar amount. And so, but you have all this crazy financial news in the backdrop. It's all bearish. It's all super bearish. It's all kind of blood in the streets type stuff. But what we're going to do is we're going to look at this 1, 2, 3, right? Candle number 1, candle number 2, candle number 3. Daily candle number 1, candle number 2, candle number 3. And so we look at, beautiful kind of like textbook CRTs happening in a fractal fashion. And it was actually a little bit later that I discovered that you actually have it on a monthly level as well. So going to FX replay, I'm going to try to get through this pretty quickly. This is the setup before the setup, right? So I mentioned that, you've got a balanced price range, a BPR that formed, right? You've got an opposing bearish fair value gap, opposing bullish fair value gap on the weekly time frame. Going to text here, I'm going to just number these candles just to illustrate a point, to point out a little pattern that I've noticed. You got to wait 8 candles. So in other words, after the BPR forms, if you are looking for a weekly fair value gap entry, which is kind of like what this is, there's many ways to dub this, and there's many kind of analytical frameworks that you can use to understand something like this. But on a weekly time frame, it ends up being a weekly FVG entry. It takes 8 weeks. It takes 8 weeks after the BPR forms. We close above the high that broke the low. This is a weekly market structure shift as well. This is also a weekly model number 1, right? So if this is the down close candle that took out the old weekly low, right? The old important low on the weekly time frame, it took it out. It's a down close candle, and then we need to retest this, right? This is an order block. I used to call these like Romeo order blocks because obviously Romeo is the one who created all this, right? I still do. I still call them a Romeo order block. But this is a really important order block, right? We need to retest this. It takes 8 weeks, and it really does take 8 weeks because this is after Friday that this happens. I'm going to go to a slightly lower time frame, and I'm just going to let this play out a little bit here. This is like the week. Yeah. So this is like the week, like going from, Monday to Tuesday to Wednesday, right? So here we are. I'm gonna go to the 4-hour chart now. The week opens here, which is kind of crazy. I'm gonna put a little vertical line at the week open. Right, the week opens there. The previous weekly low is here. Okay. And so this really is a bearish weekly candle, right? But it turns into, and this is a crazy thing about crypto, is I'm not sure if it was like rumors circulating over the weekend because I don't think it was Janet Yellen at the time. Like they get off work on a Friday afternoon and they're done. And the whole idea of like the news cycle, so you can release if you want to release some kind of like I'm just going to check my mic, make sure my mic is still good. It's still good. Okay, perfect. Let's just break this thing down. So I've shown you the setup before the setup. I've shown you the accumulation. This is the manipulation. So the true manipulation, if you think of like this as the range low, that's a good range low, like that little swing low there. Okay. If this is the range low and this is the range high on a candle range trade, right? All of this was accumulation. I forgot to mention that this was turtle soup, by the way, a bearish turtle soup. The bearish turtle soup completely plays out as price stabs into the higher time frame draw on liquidity, which is this daily fair value gap. Why did price need to take out this daily fair value gap? Well, it's a consecutive fair value gap, and that's inefficient as all get up, and as the excuse and also the catalyst, the thing that's like juicing traders into the market, I mean, the sky was falling, right? Regional banks. I mean, I ended up looking up my regional bank, which is based out of Cleveland. And I looked at that and thought to myself, what's the composition of their balance sheet? How many bonds do they own that they don't want to do mark to market? How many people are getting into their banking app? And this is a publicly traded corporation, by the way. Like, this bank has a stock ticker, right? But at the same time, it's small. It's small compared to the JP Morgans of the world. Anyways, looking at the entries here. I've been following Romeo long enough to remember when, in order to have a model number one, it actually had to have a fair value gap after the order block. But I won't go there. So this is a newer model number one, right? So you have a down close candle with a pretty fat body that takes out an old low. Then you have a close above that down close candle, and then price trades higher, much higher. It hits the internal liquidity. It forms a breaker, and then it trades back down and stabs and retests it. This is your model number one if you are a true crypto trader trading the Tether contract on the weekend. This is your 4-hour model number one. This is your most aggressive possible entry because you are buying below the old low. You're buying below the range. You are buying at the peak of the manipulation. This is a CRT, right? This is a 4-hour CRT. Of this candle, right? And then it immediately has a payoff, and then there's another CRT, right, of this down close candle. So there's like 2 subsequent CRTs. I'll tell you which one that futures used. This turns into, I'm going to delete this order block for a second. This turns into a classic, what I would call a classic model number one on the 4-hour time frame. Because you have this fat down close candle that took out this low, right? And this is kind of like what futures traders kind of like tapped into on the Sunday Open is down close candle, fair value gap, then watching to get long, right? Watching for a very low volume and very nuanced and subtle CRT of this down close candle, right? There, and it rips higher, right? Now, of course, futures market doesn't open until here. this giant candle right here, and so it's like I can go on the 15-minute chart. I'll show you when the futures market opens. Futures market doesn't open until here, 5 o'clock, right? 5 o'clock. Boom, right there. Yeah, so those futures traders are not getting a model number one. They are not getting a model number one. Futures traders, so oftentimes Romeo, he'll recommend that beginners only trade the third candle. Well, futures traders only got to trade the third candle. The third weekly candle, the third, not necessarily the third monthly candle, which is kind of interesting. Though is March candle number 3? I think it is, right? And I was looking at that before, which is kind of funny that like the true open of the March monthly candle is the first Monday in March. This is kind of funny. So like midnight on the first Monday in March is the monthly open. So futures traders got to buy below the monthly open still, which is kind of cool because it is a monthly CRT. We'll zoom out and we'll look at it. It's totally a monthly CRT as well. But yeah, so entry number one is your model number one. Lots of different ways to look at it. You know what's kind of fun is let's look at, we're on the 15-minute chart. Let's look at the 15-minute market structure shift that happened. So you've got a swing low here. You've got, and then the high that broke the low is this high. I'll put a highlighter on it. I'm gonna have to go soon, but just bear with me for a second. Oops, not that second one. But there's the high that broke the low. So you have a low, and then it gets broken, and then there's the high that broke the low. We close above the high that broke the low when we form this little breaker here over the weekend. Or actually, it is over the weekend. I mean, the markets are closed. Futures market's closed. Okay. Then you have a retest of this low. It stabs down into it, and it pops right back up, and it never goes back. That is a true market structure shift on the 15-minute time frame. And so as a futures trader, if you're trading the futures open and you just go long because it's candle number 3 and because you are bullish, because there's a daily CRT, a weekly CRT, and a monthly CRT simultaneously occurring, well, then you're fine. You're fine. So here's the other entry right here. The other entry is a FVG entry on the 4-hour time frame. Check this out. Bullish FVG. There was even a little baby bullish FVG right there. But this is a big bullish FVG, another big bullish FVG, consecutive FVGs. We stab into the second of the 2 FVGs, and it forms a 4-hour CRT. Right? So there's your FVG entry. Back when I made the PowerPoint, I called this model number 2. I don't know if I should still call it model number 2, but it is. We didn't get a breaker entry. Like price never retraced all the way down into this breaker, this first breaker, right? You could kind of, should you call this a breaker? I wouldn't call this a breaker, because to me a breaker forms after the low. A breaker forms after model number 1. But anyways, then you get the kiss of death. Then you get the kiss of death. And what level are we kiss of deathing? Well, going back to the weekly chart, we go right there, and that doesn't have a low, so we get a kiss of death into that low. I'll just show you really quick. So there's your kiss of death. Bang. Okay. All right. Thanks, guys. I gotta go.